So there's been quite a bit of news lately about the person who hacked the SEC's X account. Prosecutors are pushing for 2-year sentence.
Right. And it's more than just, a social media hack. It really touches on finance, digital security. It's got big implications.
Definitely. Because back in January 2024, someone got into the SEC's official X account, put out this fake announcement saying Bitcoin ETFs were approved.
Which, at the time, was huge news everyone was waiting for.
Exactly. And the market just, boom. Bitcoin jumped over $1,000 almost instantly.
Yeah, that reaction really showed how much anticipation there was. The market was hanging on every potential word from the SEC.
So today, we're going to dive into this. We're using a Cointelegraph article from May 12, 2025 as our guide. It gets into the sentencing recommendation for this guy, Eric Council Jr.
Right, he pleaded guilty.
Yeah, so our plan is to unpack, how this happened, the method, this SIM swapping thing, the consequences for him, and maybe what it means bigger picture for rules in crypto.
Okay, let's get into it. So, counsel pleaded guilty. That means he admitted to being involved in compromising the SEC's account. No trial needed there.
And the prosecutors landed on recommending 2 years in prison. That feels significant for this kind of charge.
It does. The article mentions the filing was on May 12th in the D.C. District Court. And it looks like he's got a court date coming up soon.
Yeah, May 16th, before Judge Amy Berman Jackson. So we'll see what the final sentence actually is.
Right. This is just the recommendation for now.
Now, the method. The article says counsel was part of a group, and they used a SIM swap attack.
Yeah.
Can you maybe break down what that actually involves for anyone who isn't familiar?
Sure. So basically, a SIM swap is where attackers trick or manipulate a mobile phone company. They convince the carrier to transfer the victim's phone number to a different SIM card one the attacker controls.
How do they manage that?
Yeah.
Sounds tricky.
Well, it often involves social engineering. They might call customer service, pretending to be the victim, maybe saying they lost their phone or something. Sometimes, like the prosecutors mentioned here, it gets more sophisticated.
Right. The article mentioned fraudulent IDs.
Exactly. Using fake IDs, going into actual telecom stores, lying to the staff there. It's not just a quick phone call sometimes. They really put effort into impersonating the legitimate owner of the phone number.
So they convinced the phone company that they were associated with the SEC's account phone number.
That seems to be how they got control, yes. And once they have the number, they can often intercept things like password reset codes sent via text message, which is likely how they got into the X account itself.
Wow. And the article says counsel wasn't working alone.
Correct. Prosecutors pointed to co-conspirators, some here in the U.S., others overseas. So it sounds like a coordinated group effort.
Okay, so they get control. Then they post this fake news in January 2024 about spot Bitcoin ETFs being approved. We mentioned the market jump, over $1,000 for Bitcoin. That's the immediate hit.
A really immediate hit? It just shows how sensitive things were and honestly how much power a platform like X, especially an official account, can have in moving markets, even if the information is false.
It really makes you think about information integrity, doesn't it?
Absolutely. How do we trust what we see, especially when it comes from what looks like a verified official source?
Did the SEC manage to pull the fake post down quickly?
Relatively quickly, yes. They got it removed. And the really ironic part, or maybe just underlines the anticipation, is that the SEC did officially approve the spot Bitcoin ETFs the very next day.
Oh, wow. The timing.
Yeah. So you had this fake announcement causing chaos. Then the real news lands just hours later. Talk about a roller coaster.
Okay, so back to the sentencing. Why 2 years? What's the prosecution's argument for that specific length?
Well, the article quotes the prosecutors calling it a sophisticated fraud scheme. They're really emphasizing the planning involved.
The fake IDs, lying to the phone companies.
Exactly. Using those fake documents, making misrepresentations, getting those password reset codes sent to the co-conspirators. They see it as a deliberate, complex crime, not just a simple prank.
There's that quote in the piece. This conduct deserves a significant penalty. They're not mincing words.
No, it signals they view this very seriously, targeting a government agency's communication, causing market disruption. They want to make an example, it seems.
Now, the article brings up something interesting, the timing. There's a change in DOJ leadership happening under President Trump, interim appointments in key spots. Does that Could that affect things?
Well, that's the million-dollar question, isn't it? The article points out the uncertainty. President Trump has had some ties, or at least expressed some views, related to the crypto industry, even holding some himself reportedly.
So does that mean a potentially softer approach on crypto crime, or?
It's really hard to say. It just introduces a variable. Will the DOJ's priorities or approach shift under this interim leadership? It's something observers are definitely watching. We can't really know yet.
Fair enough. The article also draws a quick comparison to another case, Alex Mashinsky, the former Celsius CEO. He got 12 years after pleading guilty.
Yeah, that serves as a kind of benchmark, I think. It shows that courts are willing to hand out very long sentences for major fraud in the digital asset space. Obviously, the cases are different, but it provides context for potential penalties.
And then there's a quick mention of another Cointelegraph piece, something about an SEC U-turn on crypto. What's that about?
The article we're focused on doesn't go deep into that, but the headline itself suggests there's a lot of movement and maybe shifting stances in how the SEC is dealing with crypto generally.
Some more regulatory uncertainty, perhaps?
Potentially, or just an evolving landscape. It hints that this hack happened against a backdrop of broader changes and ongoing questions about crypto regulation.
And just looking at the hashtags the article uses, hashtag law, hashtag SEC, hashtag hackers, hashtag Bitcoin ETF.
Yeah.
It really does pull together a lot of different threads.
It really does. It's a cybercrime story, a financial regulation story, a market impact story, all rolled into one. It shows how interconnected everything is now.
Okay, so let's try to wrap this up. We've got Eric Counsel Jr. pleading guilty to the SEC account hack via SIM swap. A pretty sophisticated attack. Prosecutors want 2 years, stressing the planned nature of the fraud. This whole thing caused a real, though brief, spike in Bitcoin's price right before the ETFs were actually approved.
And it's all happening while there are questions about future DOJ approaches to crypto cases, and the broader regulatory picture seems to be, well, still developing.
Right. It definitely seems like authorities are taking these kinds of cybercrimes, especially ones hitting official channels and markets, very seriously.
And that SIM swap method, it's a persistent vulnerability, relying on manipulating people and processes as much as technology.
Yeah. It really leaves you thinking, doesn't it? With financial markets and social media so tangled up now, and information real or fake spreading so fast, what are the challenges ahead? For regulators, for platforms, even for us as individuals trying to figure out what's real. How do we protect the integrity of information? It feels like this case is just one piece of a much bigger puzzle.